We are introducing Arewa Youth Mentorship Program. The AYMP is a collection of Northern Nigeria academics and professionals from different spheres of life who volunteer to offer free mentorship and equip Northern Nigeria youth at all levels with necessary knowledge on career opportunities, scholarship grants, personality building, innovation, among others.
Hello everyone, my name is Tariq Ahmed. I am going to be the moderator for today's session. And as always, on behalf of the organizing committee, Arewa Youth Mentorship Program, it is my honor and privilege to welcome you to this session, which is titled Understanding Stocks Made Simple, How You Can Build Wealth with the Smart Way. So we are delighted to have you join us for this very interesting and hopefully inciting practical discussion. In a time where financial decisions increasingly shape our long-term security and opportunities, we feel like conversations like this are very important in helping individuals develop a clearer understanding of investing, managing risk, and also building wealth responsibly. So today's session is designed in order to simplify key concepts and also look at around the kind of stock investing, especially for us. A lot of us are beginners, and also to encourage informed, not just informed, but also disciplined approach to financial growth. Our agenda will comprise three main points. We'll start with an introduction of AYMP and a welcome address from our host, Dr. Maji Haruna. We'll then invite our speaker, Dr. Salihu Lukman, to deliver his presentation, and after which you'll get the opportunity to ask a question or make a comment. This would be towards the end of the session. And finally, I would like to emphasize that, for us, AYMP, we are not financial, more or less financial advisors. The information that will be shared today is strictly for educational purposes. And so we are all encouraged to carry out our own research where necessary, seek professional financial advice before we make any investment decisions. So at this point, I would like to call on Dr. Maji to give us our welcome address and also to talk to us about AYMP. We've been producing some of similar sessions, mentoring a number of individuals for about 5 years, but I'll let Dr. Maji talk about that. Dr. Maji, over to you.
Thank you, Dr. Tariq. Assalamu alaikum, everyone. And my name is Dr. Maji. I would like to welcome you all for our 50th AYMP mentorship session. And this is our 50th, as I mentioned. And of course, it's a great timeline for us. It's not just a number, to be honest, 50. It is a testament to our collective commitment on youth development and the knowledge sharing that we achieved this 50th session or 49th session previously with you guys being with us all the time. And we would like to thank you for that. As always, AYMP is a platform which was created in the year 2020, if I could remember exactly, in our first meeting, by Northern Nigerian concerned students that reside in different parts of the world. And we try as much as we can to share our experience and the lesson that we learned, and to give the opportunity that we know about in different areas such as career guidance, scholarship, entrepreneurship, and personal growth. And today's session, of course, understanding stock made simple, is really timely, and it's very important topic. And because, as Dr. Tariq mentioned, financial literacy is no longer optional at the moment; it is essential. That's why we are honored to welcome our guest speaker, Dr. Salihu Lukman, who is a seasoned professional, to simplify the concept of stock and investment to us, and to help us understand and make decisions in this area. As we engage in the session, we encourage every one of you to fully participate and ask questions if needed at the end of the session, and maybe write down if you have any question in the comment section, and also to listen attentively, to make use of this program as much as you can. We thank you all for being part of the AYMP family. This grows, or this milestone is not just for us mentors or for us, the organizing committee. It is a collective effort for all of us. And I would like to hand you back to Dr. Tariq to continue with the program as planned. Thank you so much for your time.
Yes, thank you. Thank you very much, Doctor. What we'll also do is to share the link to the social media platforms. I mean, for those that are joining us for the first time, you can always follow on the previous sessions. This will be on YouTube, and there are a lot of insightful discussions on Telegram as well. So as mentioned, remember, our aim is not just to listen to this presentation, but really to learn, to reflect, and also to take away practical insights that we can apply in our personal financial journeys. So we really encourage everyone to, as Dr. Majid just mentioned, to remain engaged, to take notes. I know one of our mentor, Professor Rabia, always mentioned that we should be taking notes. So remember to take notes, and also to make the most of the discussion segment at the end of this session. So without taking much of your time, we'll call on our speaker today to give us his talk. However, before that, I'll introduce Dr. Lukman. Dr. Lukman is an assistant professor of civil engineering at the University of Baden in Saudi Arabia. He obtained his bachelor's and master's degree from ABU and a PhD from King Fahd University of Petroleum and Minerals in Saudi Arabia. Dr. Lukman has played a pioneering role at the university, which is the University of Baden, contributing to the establishment and growth of several engineering programs, including mechanical, civil, and chemical engineering. His responsibilities span teaching and student supervision, curriculum development, and evaluation in line with international accreditation standards such as ABET, which is the US accreditation body for engineering courses, and NCAA, which is a Saudi Arabian accreditation body. He does faculty recruitment, laboratory development, academic scheduling, and overall administrative coordination across several engineering departments. He also served as head of department, becoming the first African to hold some of these positions within the institution. Now, beyond academia, Dr. Lukman is passionate about knowledge sharing and community development. He has mentored thousands through educational initiatives, including a free stock investment masterclass designed to make investing simple and accessible for beginners, thereby helping individuals understand practical pathways to building long-term wealth. So thank you once again, Doctor, for honoring our invitation. I've chunked, I've got loads and loads of information regarding yourself and the good work that you've done. Given the time constraint, I've kind of summarized that. I hope you wouldn't mind. But at this juncture, I'll pass on the virtual mic for your presentation. Thank you once again.
All right, you're welcome. The pleasure is mine. Let me share my screen. Can you see it?
Yes, we can.
Okay.
Yes, we can see your screen.
Okay. All right. Thank you for inviting me to talk on this important topic, understanding stocks made simple. How can you build wealth the smart way? And this is the outline that I intend to follow, part 1, part 2, and then part 3. To start, I would like to share with you my long story, but in a short form, okay? So that you have a sense of like where I am coming from and where I'm heading to, because it has a relationship to what we are going to discuss this afternoon. From 2019 to 2021, I was concentrating on health I was diagnosed with diabetes 2015, took medication with insulin injections sometimes, and then I successfully weaned myself off medication in 2016. Then in 2019, with other, friends, medical doctors, pharmacists, nutritionists, formed Diabetic Monitoring Forum, where we advise, diabetics on how to properly manage the condition and possibly reverse it. We achieved a lot of success in this regards, and just like the stock that I just started now. So that spanned for about 3 years intensively. And then I realized something very crucial, that health, even when you reversed your diabetes, there is something, because we advocated for lifestyle changes, lifestyle enhancement alone, not using medication. But then part of life enhancement is ensuring that, you eliminate stress. And that took us to, or it took me to psychology from 2021 to 2024. Okay, thank you. So I was talking when, it was reconnecting me. So like I said, I realized that, if your mental health is not well taken care of, it will significantly affect one's health, physical health. But then again, I realized one other thing that could constitute a stressor, which is now the financial stress. If one's, expenses are not well taken care of, then definitely they will constitute a stress. And then once they constitute a stress, they will affect one's mental and physical health. And from 2024 to date, I now delved into wealth creation, investment, and all that. And that's so from 2024, I started buying a few stocks around March, and then held for 6 months. January 2015, I looked at them and saw how they appreciated. I wrote my first article on that when I saw what I mean, just few thousands, not much, just to test the waters. So I wrote my first article on my experience, January 2015, then bought more, and then held for another 8 months till August 2015. And then when I saw how they appreciated, some doubling, tripling, and all that, I was left with no other option but to look more closely into this issue of stock investment. And since August 2015 till today, almost every day I study it, I look at it, I study the news and all that. So I have gathered some experience, because it's all about practicing. It's all about being in the market, watching how it moves, and then gaining the experience as it moves. So I'm just going to share with you the little experience that I have gathered thus far, which could transform your health to wealth. And then it will increase your financial literacy, and probably subsequently, you will become financially independent. So the problem hook, why many hardworking people stay financially stuck. I mean, you work hard, you earn income, you save money, and yet prices keep rising faster than your savings. And then that will constitute financial stress, definitely. Part of the issue, you have inflation, especially in Nigeria. Although now it is slowing down, it rose to around 34%, from 2023 to around 2014 or 15, but it was easing down or slowing down now to around 15%. So even at 15%, inflation is really a monster, because say you save 1 million in a bank, it loses value every year, because that purchasing power will be eaten by inflation. But companies selling cement, food, fuel, and data keep growing. They keep making profit, while, your wealth is not increasing. So the question here, or the rhetorical question here, is, are you spending money or also owning businesses? This is very crucial. Are you just earning to spend? You earn and spend, or do you own business that could increase your wealth over time? This is a very good question that we need to ask ourselves. Now, and that takes us to the big mind shift. The mindset shift here, from consumer to owner. Every day you buy bread to eat with your family, you buy sugar, you buy fuel, in your car, you buy data. Even this program cannot be possible without, a very strong data. But the big question is most people, they earn to spend. But investors, they earn, they own the companies and grow their wealth. And of course, you can be one of them. No matter the amount that you earn monthly, uh, no matter, big your salary is, if you are not growing that money, if it is not growing, sincerely speaking, expenditures, expenses will come and, just clear them off. And then you find yourself being trapped, in one corner when some financial issue, comes up. So examples here you have, let's say cement, Boa Cement, Dangote Cement, another company for sugar, Dangote Sugar. For data, you have MTN Energy, you have Seplat, and other companies. So all these companies are growing. They supply all these things that we consume, either in form of industrial good, in form of food, in form of whatever it is. And they keep growing. Now, stocks, simply put, it implies, the ownership or equity. Definitely, it's not gambling. How can you now begin to think about moving from being a consumer to owner? By being owner, you now own shares in some of these companies. You become a part owner, you own some equity. But definitely, this is not gambling. And that takes us to the myth because some people, especially in our area in the north, there are a lot of, myth with respect to stock investment or the capital market as a whole. I will just look at some few and then provide like the first one. You have, the stock market is gambling. Just because prices go up and down, some feel like it is simple as gambling or the same thing with gambling. Definitely, it is not gambling. Gambling is random and investing is informed. Random by the sense, in the sense that, it is simply a matter of luck, just like throwing a pair of dice, so that is completely random, while investing is informed. We are going to see how informed you can be in order to avoid having your investment to become gambling, because investment can become gambling if it is done without adequate knowledge and research. And then myth number two, some say you need millions to invest in stocks because usually they read headlines in which they see some rich people buying a lot of stocks in billions of naira. Recently, Otedola sold his stock in Geregu Power about in millions of dollars. I mean, that translated into billions of naira. He bought it at 250 million, sold at about 750 million, which gave him several billions. At IPO, it was 100 naira. 3 years later, it rose to 1,100 and around 41. And then another big man came in, who is the former governor of Zamfara State, Governor Abdulaziz Yari. He bought the stake. The one left by Otedola. So some feel because they hear millions, billions, they think it is just for the rich. Definitely, that is not the case. You can start small and grow gradually. With few thousands, you can grow into millions or even billions. Like I told you, when I started investing few thousands, 5,000 here, 2,000 here, 3,000 here, like that. I threw it just to test the waters before now gradually increasing, taking more positions as I understand the market more and more. And then myth number three, the 2008 crash means stocks are unsafe forever. Yeah, for those that have lived during 2005, 6, 7, 8, 9, there was, stock market crash, although there was even global financial crisis that affected even the US and many financial systems around the world. So Nigeria was no exception. So although there were, crashes during the 2008, but then markets recovered and many stocks became much stronger afterward with better regulation by the Securities and Exchange Commission and the Nigeria Exchange Group, which monitor the stock market. So these regulations strengthened the market, and many of the companies that survived are stronger today as we speak. Myth number 4, which is also one of the most critical one affecting most of our northern people or the Muslim in general. Some think all stocks are haram because of riba interest. So for that, they simply write off the capital market entirely, thinking that, since it is related to banking, then in that case, it is completely haram. And for that, they don't even engage in trying to understand, to know exactly which part is haram and which part is halal. The truth is that there are, for stock in particular, there are Sharia compliant stocks under the NGX Lotus Islamic Index screened by a Sharia board. And this constitutes about 12 strong, strong stocks. MTN is one of them. Most of the companies here, we know some of them: Boa Foods, Naco, Dangote Cement, Presco, the Salt, Lafarge, which is for cement as well, Boa Cement, Jaiz Bank. So all these are under the NGX Lotus Islamic Index, which is one of the indices of the stocks that we have, because there are several indices. So the truth of the matter is not all are haram, but if one will try to understand, he can, of course, there are beer companies, breweries, and all that. So one should learn to separate the wheat from the chaff, and that will now help someone to invest with knowledge. I started introducing what is a stock. Now, to put it simply, what are you really buying? When you buy a share, you own a small part of that company. Yes. If you buy, let's say 1%, if your share number of shares are up to 1% of the company, you buy like a piece of pie. If it's up to 1%, it means you own 1% of that company. You are now a shareholder. You have become a shareholder. And as a shareholder, you can benefit from dividends if that company is a strong one that makes enough profit and pays dividend. So, and that can be paid in cash periodically. Some pay once in a year as final dividend, like Boa Cement and Boa Foods and Dangote Cement. Some pay twice a year, interim dividend and final, like Presco and Okomu Oil. Some pay, banks also, most banks also, they pay twice in a year. And then some even pay 4 times quarterly, like Seplat. Seplat pays 4 times in a year, quarterly. Every 3 months, you have a dividend payment. And then you can also, as a shareholder, you can benefit from price growth, which is capital appreciation. Remember the first time I bought Jaiz Bank stock in 2014, it was at 2.14 naira. Now it is selling at 8 naira. 8 naira. That is over 300% within just 2 years. 300%. And that is capital appreciation. So over time, despite the ups and downs of the stock prices, which is normal with the market, overall, you realize that, the stock prices are eventually growing. They are increasing, and that will lead to capital appreciation. So I gave example of Okomu Oil. The company sells palm oil, it grows, the profits grows, and you earn dividends and a higher share price. So shares are the pieces of a stock, and equity is what those pieces represent. Let's say you have 10%, then you have 10% equity, and which represent your ownership. So equity is simply the ownership. I remember someone asked me because he thought that those shares are not even available for, common people like you and I to go and buy. He thought it is, just for the companies to buy. And I was telling him that no, all these stocks are there at any point in time, depending on their liquidity, which we are going to explain in some few slides to come. Now, how the stock market works, and that will take us to the stock market mechanics. I mean, we as scientists, we have learned fluid mechanics. I've been teaching fluid mechanics, structural mechanics, all strength of materials. But now, at a later time, I have to go and learn also the market mechanics, which is very, very important and to some extent more difficult because here you are dealing with social science, not science that has sometimes predictable outcome, and something can be clearly modeled. The modeling the stock market is one of the toughest things, as we are going to learn in my explanation as we move on. So who buys and who sells? Buyers, they buy because they believe the business will grow. Here, I mean, not the product, but the shares, okay? The shares. So you buy a share because of so many reasons. You believe the business will grow. For instance, you have the TIP, the Initiates, which is a waste management company and waste decontamination company for the public and the government sector, the private sector as well. I mean, if you buy its shares, you are, thinking that this company will grow over time. Just recently, TIP did, a PO, a public offer, in which it sold its shares at 9.5 naira. The PO just closed last month in January at 9.5 naira. And this year to date, it has appreciated. You can see 46% from January, 2nd January to date. It has appreciated 46%. And yesterday, it sold at 19.45. The PO was 9.5, and it has doubled, 100%. 100%. So those who bought the PO, of course, they believe that the company is going to grow, and the share price has already, started reacting to that. And then another one you have Fitsin, it's a healthcare, pharmaceutical company, also did rights issue, which I think it closed this month or last month, but rights issue is open only for existing shareholders. It sold the shares. The shares were sold at 35 naira, 35 naira, and see Fitsin trading at 70, 100%. 100% instant discount of 100%. And Fitsin, of course, is very strong as well. Year to date return 30, almost 40%, just in less than 2 months. 40%. This is how money grows. It grows here passively. You just buy, you hold, and you just be watching your portfolio value rising over time. And again, you can buy because you expect dividends. I mentioned Seplat that pays dividend, quarterly, which is, I mean, its share price is the highest on the stock market, 7,370. It has the highest value per share. Of course, it makes a lot of profit as well. So its earning per share is also good, that supports this particular share value. So, and then you have Presco as well, which pays twice. And you have banks, like I said, the highest paying dividends are actually banks. UBA is number one, followed by, I think, GT or Zenith, one of them, second, third, and then you have, I think you have Boa, maybe Seplat, and then probably Dangote Cement, and then Boa Foods, like that. These are the 5 top dividend paying stocks. Yeah. You can also buy, and you can see the stock price is 26% or 27% year to date. It's gradually rising. It will remain flat and then rise gently because it's one of the strongest, high cap stocks that we have. Then you can buy stock because you expect price appreciation. And for price appreciation, we have a lot of other examples to cite here. You have Unicel, you can see in 1 year, it has done just 12 months, it has done 1,000%. 1,000%. You can imagine 1,000%. That's 10 times. That is if you, let's say exactly 12 months back, you bought Unicell, let's assume 100,000 times 10. Now you become a millionaire without lifting a finger. The only finger you did was to say buy. That was the only finger that you lifted, clicking on the buy button, and then it grows 1,000% within just 1 year. And you have a lot of other stocks that rise. You have Score, that it's year-to-date return from January, less than 2 months, 345. I remember I bought Score back, like 2 months back. Also, it was 7.1, 7.1, and then bam, 345%. This is really significant price appreciation that, I mean, I don't know if there is any other passive source of income that can rival such price appreciation, such capital appreciation. And then you have NCR as well, which is the top performing stock, the highest performing stock last year. It did about 1,300, over 1,300% last year, NCR, and it is still increasing. The first time I think I bought NCR was around 28 naira. And then when I saw the promise that it holds, because previously 2024 it didn't make profit, and then 2025 it is on path to recovery, and then the investors now reacted that way. So 28, and then it rose to around 60 something. I took more positions, and then it selling at 199 now. In just 1 year, it has risen 2,626%. This is no small joke. This is price appreciation, capital appreciation in real life. And then you have MTN as well. MTN is also doing well. It is one of the highest, and the high cap stocks, the blue chips that we have. 2024 MTN didn't do well. I mean, due to some foreign exchange, FX issues and all that. So the stock price went down. I bought MTN initially at 200 in 2024, and then it went down to 170. And then 2025, when the NCC approved, for the telecom companies to increase their prices, bam, MTN prices, the share price increased. 170, it moved 200, and now it is selling at 620. I bought my first MTN stock at 200 naira, 2024. These are not jokes. Sincerely speaking, this is not gambling. It is not gambling at all. When you study the market, when you study the individual stocks, definitely over time, if you are patient enough, then you will definitely have price appreciation. Your capital will multiply over time. But knowledge is one of the strongest points that we must understand, the stock, the fundamentals, and all that, which we are going to explain later. Now, sellers sell because they want profit. Of course, you can sell because you want profit. Probably the stock has made enough, profit that you want to take profit, like Jaiz, from the beginning of this year, January, it made 76. Throughout last year, the price was fluctuating between 4 naira, 4.5, 4.3, like that. And then bam, this year it started rising. It almost double within a short period of time, trading at 8 naira. The first time I bought Jaiz was 2.14 naira back in 2024, and now it's at 8 naira. So someone may decide to feel, I want to take profit. Maybe I have something to do with the money, and then you sell and then take your profit. Another one that is trending now is Deep Cap, Deep Capital Management and Trust, which has been rising, because of certain transaction that took place, shareholder, institutional at the institutional level, and then 250, almost 259% year to date from January, less than 2 months. These are not jokes. These figures are not jokes. Those that hold these stocks, I mean, they are always smiling to the banks. I tell you, these are not jokes. This is real wealth creation. And you can be part of it if you will only study and understand the stock market mechanics and join. Some can sell because they are afraid. Maybe if a stock is falling, and then like Bank, First Bank stock, I mean, it rose in December. It made about 40% within a short time, but then from their results of third quarter result, their profit plunged because of some some loans issues that they have. Then probably the market reacted and the stock is going down. I think it rose up to, I think, 50 something, and now it's fluctuating. So some may feel, panic mode, let me sell because it's going down. But of course, one thing you should learn about the stock market is to learn to contain panicking, is to learn to be patient, especially when you know that the fundamentals of those stocks are solid. Then be patient. There is no need to sell a stock just because the stock price, plunged. So long as the fundamentals are good. Some sell because they need cash. Simple. They need cash and they hold several stocks and they sell it. You have, like non-codismen, you have NACO. Like in the case of NACO, I mean, I first bought NACO around just September last year at 105. And then in November, because of, the market, took a bearish turn and most stocks plunged, it went down to as low as 85. And I encourage some around me that, look, this is a very good time to enter the market. Buy the dip, buy the dip. So one of my friends bought it at 89. And now I'm sure he's smiling to the banks. Sincerely speaking, NACO has been, increasing 105, 110, and now 136. So some may just decide to sell because he has made enough profit and he needs the cash. Simple. Now, other examples you have like investor buys Boa Foods for long-term growth, and then another investor sells Boa Foods to take profit. Okay, some will buy for long-term growth and the other one will now sell to take profit. Now, prices move because people disagree. So the price can move up or down. If people don't disagree, then price will remain static. It will remain constant at support level. But most of the time, because the stock market, I don't know if there is a market that is bigger than the stock market. Sincerely speaking, if you look at the daily news report, on daily basis, you have, transactions, deals in thousands, and then the value in billions of naira, billions of naira, 10, 20, sometimes even hundreds daily per day. So it is really a market that, I mean, you cannot imagine how wide and vast it is until you key in. So prices move because people disagree. And that disagreement will now determine how the price move, either up or down. And that will have, the liquidity, the free float will have something to do with that, which we are going to explain in a few slides to come. Now, why prices go up and down? That is very important. For those that took economics in high school, as science students now, some science students are taking economics. During my time, I did not take economics. There was no economics available for science students at the time in my school. So, but now I have to go and learn the rudiments, the very fundamentals and basis, of business, economics, and all that in order to understand the market proper. So the first fundamental issue is the issue of demand and supply. Like everyday market, as you know, the higher the demand, the prices go up. When you have few sellers, high demand, few sellers, the prices will go up. And then when you have many sellers but few buyers, the prices will go down. And this is the same thing that also affects stocks. Okay, we will explain this in details using order book, and all that. When you have many buyers and then few that want to sell, probably because of the liquidity of that stock is low, then such stocks could have, substantial or significant price volatility. And then when you have many that want to dump the stock, they want to take profit, and then with few sellers, then such stock value can also go down. So these are realities of the stock market, especially for those that are into it. We will demonstrate using some other books as we move on. So real life examples like during Ramadan, dates are few, buyers are many, and then prices usually rise. And that is also applicable to some food items, like fruit and all that. People sometimes they don't bother taking fruits except during Ramadan. And then you realize that the prices of fruits overnight skyrocket. They just skyrocket, because you have a few buyers and many sellers. In the stock market, the same thing happens. Like I mentioned, strong results, let's say from Boa Foods, if it releases a result that it has, made significant profit, such news can, influence investors to, this is a good stock then. If I buy it, I can get good dividend, and over time, the share price could appreciate, which can lead to capital appreciation. So more buyers can rush in. And when more buyers rush in, the fact that the shares are limited, they are fixed, then the price could go up. Why some stocks move fast and why do some move slow? I started, in the previous slides, I was mentioning about liquidity, free float. So now we will explain liquidity, liquid. So what is that? Liquidity here, simply put, is how easily you can buy or sell a stock. Okay? How simply you can buy or sell a stock. Let's say you want to buy, let's say 5 million shares of a stock. Can you buy it instantly? And let's say you want to sell the same number of shares. Can you sell that number of shares instantly and without affecting, the stock price significantly? This is a very important concept, in stock investment. High liquidity means like you can easily buy and sell that stock. Low liquidity means that stock may be difficult to buy or sell. Cowrywise has like a rating for liquidity for stocks, 1 to 5, 5 being highest liquid, the highest liquid stock, and then 1 means, the lowest liquid stock. Now, examples here, you have MTN, which is a high liquid stock because you always have many buyers and many sellers. And MTN is one of the, movers of the market because many investors are interested in the stock. So for that, it is highly liquid. Any amount you want to buy, you can buy it, within a very short time. And any amount that you want to sell, you can also sell it without, without wasting any time. This is like the order book. The order book gives you, those that want to sell and what amount that they want to sell it. That is the offer. And then those that want to buy, that is the bid side, and how much they are willing to buy. So now the order book is ranked, highest bidder, because it goes to the highest bidder. So here on the side of buy, you have the highest. Those that bid highest will be on top, meaning their order will go first before any other one, and then it will go down in descending order. On the side of the offers is the lowest. The lowest will be on top, and then it goes down in ascending order. So that is how it goes. That's why you can see it has 5.0 rating, a very highly liquid stock. Now, but we are not created the same. Okay, the stock market having about over 130 companies or 140 companies, and you have different levels. you have the high cap stocks, low, and then you have the mid cap stocks, mid capitalization stocks as well. Some are not as liquid as that. And you have, let's say, for instance, here, this is, I think, for score 18 naira, no, 180. This is for NCR. It's for NCR. NCR, of course, it is a low cap stock, so with few shares to sell and all that. So now you can see from the offer side, those that want to sell, they want to sell at higher price. It is selling uh, at 199. Yeah, I think it's selling at 199, but you can see the order book, some wanting to sell at 184, 185. And those that want to buy, they want a good deal. So they go down. They want it at 180. It doesn't mean that their orders will not go. It will still go because some they may like to sell at just, market order. They just so long as it is within, sorry, alhamdulillah. So long as it is within the range, because daily, the price of a stock cannot rise or fall by more than 10%. So some could just decide to sell at just market price, and then those that bid at 180, it will now go. But if they did not get those that are willing to sell at 180, then their order will still be hanging. There will not be, matching offer. So low liquidity, it means, bigger price swings and higher risk as well as opportunity. So it goes both ways. It has higher risk as well as opportunity. Low liquidity, of course, this is not a blanket statement. It can apply to some stocks, especially those that are low cap stocks. Okay, SCOA, NCR, they are all low cap stocks. Their prices appreciate over time. But if you look at the trajectory, the price trajectory over time, you realize they are always, increasing. So at least that could, and then you can study the fundamentals, and then that could guide you. So they can actually give you good opportunity, but also they come with risk. Some do come with risk. Some can, increase sharply, and then those institutional investors, they will catch it, they will buy, and when they make profit, they will dump it, and then that will now crash the price. So one has to be very careful. Okay, they can give you good capital appreciation, but they have associated risk, which one has to understand very well. And in the few slides to come, we'll explain about risk. But let's look at, let's say, even Boa Food. Boa Food, it's liquid, it has low liquidity rating too. Okay, but Boa Food is the most capitalized company on the stock exchange. Okay, it has the highest capitalization. So even though its liquidity is low, but it doesn't mean that, it comes with any risk. The only risk that, you can say is the fact that you have widespread of bid ask, offer spread, which could, affect the share price. But apart from that, that is, the risk is, it's one of the lowest, it's one of the strongest stocks that you have, even though it has a lower liquidity than, even some stocks that have lower capitalization. Now, another concept that you need to understand is free float, which is sometimes, related to the liquidity. And free float simply is the portion of companies' outstanding shares. Outstanding shares, that is the total number of shares that the company has, listed on the market. Okay, so it's the portion of the company's outstanding shares that are freely available for trading in the stock market for you and I to buy and sell, excluding shares held by promoters, insiders, and long-term strategic partners. I'll give example here with Boa Foods. Like I said, it has, its liquidity is low. Okay, rating of 2. Its free float percentage is low.
Seems like we've lost Doctor again. Dr. Mada, can you hear me?
Yeah, I can hear you, Dr. Tarek, but I think,
Okay.
yeah, he's back.
Hello, can you hear me?
Yes, we can.
Did you miss anything?
You're talking about both foods being having low liquidity, but quite high free float.
Uh, okay, not high free float. Its liquidity is low and the free float is low as well, but
Low as
high
well, right?
free float value. Yeah, high
Right.
free float value. Because if you look at the percentage, it's low, but then the value, that 4.73% is amounting to about 680 billion naira. So you still, it can still trade freely, but of course, it's not the high liquid stock like MTN, like the banking stocks, and others. So low cap stocks, like I mentioned, tend to be more volatile because of low free float and by extension, low liquidity. So when you are dealing with such low liquidity stocks, there are associated risks and then opportunities. So you need to understand the risks and the opportunities very well. And that will take us now to, the goal. What is your goal? Before going into the stock market, what is your goal? You need to determine your goal. And here you have, two very different mindsets. Do you want to be a trader or an investor? Of course, a trader will buy a stock and hold for, let's say, days or weeks and sell to take profit. But of course, that means it needs high skill, and high stress because you have to be monitoring and see how the market is doing, and you have to watch the price daily. What about investor? By investor here is you are a long-term investor and you focus on business, the fundamentals. So a trader focus on technical analysis. He does technical analysis, to understand what to buy. Okay, when to buy. Yeah, when to buy, not what to buy. When to buy, because the essence is about making profit. He buys when it is, he wants to make profit. So he has to do all the technical analysis needed using all the parameters available, uptrend, downtrend, RSI, moving average, and all those stuff in order to maximally benefit. But investor is looking at the fundamentals. Is this company sound? Is it making profit? Is its share per earning good enough? Is it paying dividend? So these are the fundamentals that an investor look into because he wants to hold the stock for long term and he focuses on the business. It gives you lower stress and wealth building mindset. Okay, now examples here, for instance, trader can buy NACO for just 3 to 6 months. Like I told you, I bought NACO the first time in September 105, and now it is at 136. So if I want to, let's say, take profit, I held it now for around 4 months and it has appreciated. So I can now sell and take profit. Uh, and then an investor, let's say, buys Seplat for years of dividend. You can see this is Seplat. You can see the trajectory. This is its 1 year value. You can see it's moving relatively flat and then it will move gently and then move flat. In 1 year, it has appreciated by just 29%. But Seplat is a very strong company, with good fundamentals. So despite the fact that it remains flat for most of the time, you don't have your risk is minimal to the barest minimum, and then you also have dividend as well. So whether you are an investor or you are a trader, it doesn't mean neither is bad, but you must know who you are. And it doesn't mean that, they are not mutually exclusive. If you are a trader, it doesn't mean you cannot become an investor. If you are an investor, it doesn't mean you cannot become a trader. In fact, to benefit, from the market optimally, you have to be a bit of a trader and a bit of an investor. You have to hold some stocks, in the long term, and then some in the short term to take profit. So we are going to see about, how do you now compose your portfolio, which will now take us into portfolio diversification. You see, the stock market is a very excellent, a very good market that, you can dump your money, that you want to use in short term. That is if you carefully understand the market very well. And then take profit 2 3 months, spend it, do your expenses and all that. And then some are held for the long-term objective. So you can be a trader as well as an investor. In fact, being, having some middle ground is also like a very good thing, so long as you have the time and the understanding of the market to become a trader. Why most beginners lose money? So this will take us to some of, the common mistakes, following the hype, just because you hear that, someone posted on Facebook, see my portfolio, I bought it 1 week, it has become this one posted again, and then you quickly bought that stock, and when you bought it, probably that stock has done, the rally is so much, the sprint, so it's time to cool off, and then it begin to cool off, going down. So that could be very problematic. And investing without a goal, you need to understand your investment goal clearly, ab initio. That is very critical, very critical. And using your rent money or emergency money, you have your rent money that is due in the next 2 months, and just because you see that, that the stock market is doing well, you thought, let me put this rent money which is due in the next 3 or 4 months, and then probably I can make some quick gains. While if you are, if you are skilled, if you are a skilled investor or trader, you can still do that. You can still do that. But for someone that is just starting, definitely no. That is a very risk thing to do. Okay, or chasing fast moving stocks blindly. Every time, every day, some stocks are appreciating. That is why every day in the news you have the top 10 losers and the top 10 gainers. So some have gained and some have lost. Despite the overall market performance, even when the market is dipping, you will see some stocks still rising. Even when the market is booming or bullish, you will find some stocks still dipping. So understanding the basics is very important. Understanding, this stock mechanics is very, very vital. And then panic selling, chasing fast moving stocks blindly, panic selling during price drops. Yeah, just because price drops, it doesn't mean you should quickly go and sell your stocks. Like I said, the stock market, it rewards the patient. It rewards the patient. Of course, unless there are news that that particular company is actually going under. Okay, if there are such news that you are privy to, then no matter what, like for instance, last month, 2 mortgage banks went under. ASO Savings and Union Homes also. The CBN withdrew their practicing licenses, and ASO Savings, the license was withdrawn. It was suspended from NGX, from trading 2017, due to some disclosure issues, and then it came back in November or so. It was readmitted, and since its readmission, its stock value was rising every day, 10%, 10%, 10%. There was, a popular saying in Hausa about, how is it this proverb that's idan ka ji ganga na zaki za ta fashe. I don't know how that I don't know how to translate it, So it was so unbelievable. Every day it was among the top gainers, and then suddenly, bam, it crashed. not knowing that it actually has a lot of issues. And then the information came out that CBN has withdrew its practicing license and NDIC has taken over to now liquidate its shares, its assets, and pay depositors. And if the money remains, then shareholders will now be paid. So one has to be careful for those, fast moving stocks. Okay, do your due diligence. Very important. And when some stocks are also, dropping, it doesn't mean you should just sell. Do your research, understand the market. Is it dropping because of anything fundamental or simply, the sentiment? Because normally when a stock experience, a bullish trend, it has to cool off. It cannot keep moving and moving and moving. Yes, very few stocks. There are some stocks that can actually move steadily with minimal dips, but they don't rise dramatically. They don't rise dramatically, but they keep on rising. They keep on rising with very few dips. But there are some that, they will take a rally, sprint, move sharply, and then they have to cool off. Those that bought when it was low, and then they will have to take profit. They will dump the shares, and then the price will be crashed, to a certain extent, and then it will rest before picking up. So these are normal, dynamics of the stock market that beginners need to understand. For instance, Zikis Agro-Allied Industry is a new company listed on the stock market on January 20. And ever since it was listed on the stock market, it has been, bullish, increasing daily, usually among the top 10 gainers all the time. Of course, it is a new company. It has good fundamentals, low cap, but the way it is rising, sincerely speaking, if you are not at the bottom, because it was listed, I think, at 1 naira, I think 1.08. Yeah, 1.08 naira. The first day it was listed, February 20, it was 1.08 naira. Now it is 6.7. So if you didn't join the bandwagon at the beginning when it is at the bottom, it's like similar to you being at a station, let's say a station where buses move, and then you arrive at the station when a bus has just moved. Don't follow the bus. It's a wise something sometimes to wait gently at the bus station. Wait. Another bus will come and then it will carry you, so that you start from the bottom up. That way it will, even if the share price crash to some extent, you will still be safe. Okay. But joining onto a moving bus, that has already taken off and speeding at 180 kilometer per hour, sometimes when there is a crash, sincerely speaking, it can be detrimental. Okay. And here, like still example of fast moving stocks blindly. There is deep cap. It's not a new stock per se, but there was some deal about taking over and all that has saw the stock moving up. Moving up just year to date from January, less than 2 months, it has done about 259%. Okay, even though it has slightly dropped and again picking up. And also you have, let's say, NCR that I explained earlier. If you see the trajectory, this is the 1 year, 12 months trajectory of the NCR share price. You can see it is always like appreciating. It remains static and then moves up, okay, with very minimal dips, if any. Okay, even though NCR is a low cap stock and the liquidity also very low. But if one does his due diligence, it's something that someone can look into. Now, panic selling. You have Ikeja Hotel. You can see its year-to-date return, minus 25%. Of all the about 144 stocks on the stock market, Ikeja Hotel, has the highest dip. It has the highest dip. From January to date, it has lost 25%. So someone may feel, if you have the stock in your portfolio, this is too much. I may lose my money. Of course, when it released its annual report, it has made profit. So the fundamental may remain strong, even though the share price is dipping. You have to separate the two sometimes. The share price may not be a representative of how the company is doing. Okay? Because the share price is controlled by so many things, so many variables, investor sentiments, news and all that hype, so many variables are affecting the share price. So sometimes a company can be doing well, making profit, while the share price is either remaining stagnant, static for a whole year, or even dropping. Okay, so understanding the fundamentals and the market dynamics will allow you make informed decision. So again, you have, let's say, PZ, buying PZ after it has already jumped. PZ, it experienced some losses, and then there was a pullback. No, not a pullback. It started gaining around, I think, around November. Yes, when it announced it, just before it announced its, I think, second quarter result. And then there was rally because it was selling at around 34 naira then. And then when the news came out, there was rally around it. It rises to 39, 42, even 45. And then there was pullback. It dropped down to 39, 38. And then later on, at the beginning of this year, it increased again, now reaching 55.9. Okay, so then panicking when there is a pullback, one has to understand the market, especially those that are monitoring their stocks. For long-term investors, if you buy your stock, you can just keep on living your life normal. Just once in a while, you check your portfolio and move on. You don't need to be tracking daily, okay? But for someone that wants to keep investing, that wants to keep buying more stocks, let's say monthly, then it means you have to be following the market to identify better opportunities, okay? Better opportunities. And that will help you diversify very well, okay? Diversification is very important, as I'm going to explain later. It's like you taking one fruit and someone taking a smoothie, okay? You taking just only mango or grapes or guava. Yeah, each one, is very good. But what about when you combine many, and blend it into a smoothie, or take them all at the same time? You will have all the benefits of the individual fruits that you have. Okay, and that is why diversification is one of the key things, when it comes to investment. And I will also take my time to explain that very well as we move on. The market punishes impatience. Yeah, like I mentioned, it rewards the patient as well as punishes the impatient. So it punishes the impatient. Like I mentioned, I discussed the bus, analogy. When the bus leaves the station without you, wait for another bus to begin your journey. Be cautious with the 52-week highs. Those that are trending, within their 52-week highs, meaning for the past 1 year, that is the highest price value that they have experienced. Be careful, okay? Because they may experience a pullback, which will see you, or which will see your portfolio, going into the red zone, okay? The smart way to invest. Let me take some water. The smart way to invest. I mentioned about goals. They come first before stocks. You have to have your goals ab initio. That is very, very important. Okay. You need to have your intention, your goals. Okay, it's like that is your intention. This is what I want to do. And then when you have your intention or your goal, then you have to have the right strategy towards achieving that goal, towards making sure that your goals come to fruition. Why are you investing? Okay, is it to beat inflation, or to earn income, or to grow wealth? Okay, or simply to fund projects? Okay. Example here, you can have, let's say, Jaiz Bank, MTN, Boa Foods for inflation protection because they are very solid. okay? And they do well, even though, yeah, they do well. They are solid, reliable, okay? And then you can have, let's say, Presco, Seplat, Okomu for dividends, okay? They pay good dividends. I mentioned about Seplat paying quarterly, Presco, Okomu paying twice per year, okay? And then you can have, let's say, Unicel or Mikio for growth because, their percentage increase, their capital gain is really very high. And then you can now decide to have, let's say, NACO, CWG, NCR for project funding if you have a short term to medium term. But then, can you all have them in one portfolio to serve multiple goals? The answer is yes. You can all have them within one portfolio and they can serve different goals. All these are good stocks, that I have already highlighted. I talked about them. No, I didn't talk about Unicel. I think Mikio. Mikio is a pharmaceutical company. Unicel, Interlinked is IT company. CWG also is another IT company whose stock is increasing. I talked about NCR previously. So you see, this is like a combination from high cap, mid cap to low cap. Okay, there will always be some shades of gray. Okay, don't say probably no, I want only the high cap, or I want only the low cap or the mid cap. Always try to have like a mix. Okay, a cocktail. After doing your due diligence, after looking at their fundamentals and all that, that will now, ensure that your portfolio value is always appreciating. Risk tolerance and diversification. I have mentioned risk and diversification previously. Now is the time to look at them, individually and cite some practical examples. These are the different classifications that I just did, low risk, medium risk, high risk. Okay, low risk. They're stable companies, usually from the high caps, Oswoods, that is stocks worth over a trillion, stocks worth over trillion, stocks worth over trillion. What is the? Yeah, over trillion. That is the suit. Okay, so there are stable companies. Their appreciation can be slow but steady growth with good returns, usually high caps. Okay, Boa Food, Seplat, Fitsin is a mid cap. Okay, Lafarge, Gregu, Presco, Okomuol, Mikio is a mid cap. So these are, some low risk companies. They may not give you, extremely high returns, but over time, they will give you high returns with low risk. The medium risk, these are moderate. They have moderate ups and downs. Okay, of course, you understand that market fluctuates, and definitely that means they will give you higher returns with moderate volatility. So I just look at these stocks, came up with this list. Okay, they have fluctuation. If you see MTN, it rises, sometimes it falls gradually and then pick up like that. Fitsin, Maybaker, Dangote Cement, NACO, you have Transco. Transco last year, it didn't, not that it didn't do well, it's still fluctuating, but it's a very good stock also. So here you have fluctuation, you have volatility, higher volatility than low risk. Okay. And then you have the high risk, okay, in which you have bigger swings and can move fast. You can have fast gains or fast losses because they are highly volatile. And definitely here you can accept losses as part of learning or keep in the long term, even when there are losses, because losses remain only on paper or just on the portfolio. When you look at it, if you don't cash out, they remain theoretical. It remains practical when you cash out. So if you're patient enough and the fundamentals are sound, there is no need for you to panic. Okay, so they require experience, usually low caps. Okay, so the list here you can see they are usually low cap stocks. Okay, and but they give good gains, some of them. Okay, they rise, some steadily, some rise and then cools off, like McNichols at the beginning of this year. It rises every day, rising and rising, and then it is cooling off and then rising gradually. Deep cap, yeah, it is cooling off and rising again. I talk about Zikis, I talk about NCR. Insurance companies also, some of them are good. They rise and then they fall. They fluctuate, cyclical. Okay, cyclical. So you have to determine your risk level. Okay, low risk. Are you the type that whenever you see even 1% drop, your, blood pressure rises? Okay, or are you the type that you can accommodate, you understand that the market fluctuate is cyclical, but in the long term, so long as the fundamentals are sound, they are effectively going to rise, then based on your risk level, that will inform your selection of the stocks. All these stocks that I mentioned, I carefully studied them, looked at, their share price, movement, and all that before I classified them as low risk, medium risk, or high risk. Sincerely speaking, I did a lot of webinars before, but preparing for this one, sincerely speaking, gave me the toughest time because I wanted to share, the best experience I thought I have gathered. And that means I have to do a lot of research on individual stocks, see their levels, fundamentals, and, everything, get their charts and all that. So it has really given me a tough time since yesterday throughout the night. And then when I wake up, just to ensure that I deliver the best I can, especially to beginners, because putting your money in something you don't understand is actually a gambling. That is what gambling is. But putting your money in something that you understand very well, then that is called investment. And you need to understand this very well. So risk is not bad, but unmanaged risk is the problem. You need to identify your risk level. And that means we all have different personalities. That's what I introduced earlier how I delved into psychology. So we all have different personality levels. There are some that are neurotic, some that that don't care. So you know yourself. Or first identify your risk level and then select your stocks accordingly. Of course, you can combine them, give, let's say, some percentage based on your risk level. Okay, maybe 50% low risk stocks, 30% medium risk stocks, and then 20% high risk stocks. And then that will now take us to diversification. If I say I want to take 50% from low risk, 30% from medium risk, 20% from high risk. Okay, how do I select? How many do I pick? Do I just pick one from low risk, one from medium risk? Let's say I have 1 million naira. Do I just pick just 3 stocks? One from low risk, one from medium risk, and one from high risk? Is that a good diversification? To answer this question, I would like to share some experiences which I had, okay, just to buttress this point about diversification, about risk level, okay. That is one of my one of my relatives, uh, the first case study is about diversification, particularly. So you have seen, the capital appreciation. You have seen that actually, if you invest more, the more you invest, the more money you take out. Most of the case, if you do your investment well, you have seen Jai's the year-to-date return about 70 something, I think, just in less than 2 months. Imagine you put 1 million naira. It means you will gain about 700,000 without lifting a finger. But then imagine you put 10 million naira. If you have, it means you will gain how many? You will gain 7 million naira. 7 million. Now, there is one of my relatives. He learned he got some money, and then I called him. I said, "Look, I have an advice for you. One, if you don't want to remain a millionaire, then that money that you currently got, you can keep spending, and I tell you, in no time, you can all wipe them off. Two, if you want to remain a millionaire, then I have, a suggestion. Give me part of this money. I will invest. I will create a portfolio that will ensure that you remain a millionaire for the rest of your life. How? I will create a diversified portfolio that will be, multiplying your wealth. Of course, if you wish, you can be cashing out gradually, but that ensures that you remain a millionaire for the rest of your life. And then he, listened to my advice. He gave me part of the money. And then within a week, I configured a portfolio for him. That was 18th November, about 33 different stocks from all these levels: low risk, medium risk, high risk. And once the portfolio was configured from 18th November till to date, I tell you, he has gained more than 44%. For 18th November, we're talking about December, January. This is less than 3 months. Less than 3 months, that portfolio has gained more than 44%. Let's assume he put, let's say, 5 million. It means he is 2 million richer, more than 2 million richer in less than 3 months, without lifting a finger. I always, reiterate this point, without lifting a finger, because this is passive income. You just drop the money and then, the money works for you. 44%. But like I said, 33 different stocks from different levels. So that even when I constitute these stocks, about 70% were in red. Probably because, when you buy a stock, you have, some charges about 2 to 3%. And then depending on the value, it can, and all the amount you got it and all that. So about 70% were in red, only 30% were in green. But as I speak with you now, over 98% are in green. The 2% that are in red, even though they are in red, that constitute less than about 0.5% loss. And the gains, 44% gain. So that is why constituting, your stocks differently, is very important. Even if one did not perform up to expectation, the high performing ones will outweigh their level of performance. Their returns will outweigh, the level of the loss that will be incurred by those that, failed to perform as expected. Now, this is the first case study. The second case study, this is another person that was into real estate, and then real estate, it can be very troublesome. The tenants not paying their money as and when due, and then breaking it down. So he hired a lawyer, and then all of a sudden came up with this tenancy agreement, and then they are saying they have to look into. So he was having too much trouble, despite sinking his hard-earned money, to own that property. Now, I said, okay, real estate is good, especially for to own it, and then for your family to live in one, but for running, to earn profit from tenancy, well, it depends on where you are, like in Lagos, Abuja, very booming, yeah, in other parts as well, but it can be, it can give a lot of headache. So I said, okay, let me introduce you to this, stock market. Okay. Now, just get rid of the property, give me the money, and get rid of the property and seek it into stock market. So he got rid of the property, but then he hired someone to now guide him to form his portfolio. And unfortunately, the person just bought 3 stocks, NARCO, CWG, Coverton. Yeah, they are promising stocks, and at the time they are expected to rise. But then the issue is about diversification. Sinking so much money into few stocks, it's like, giving those stocks a lot of leverage, okay, to control the portfolio value. Now, Coverton, because this is about in September, Coverton immediately started going down, and then second quarter result wasn't good, and then it wasn't doing well. NACO and CWG started appreciating in September, and then the gains were good, outweighing the downside of Caverton. But then in November, the market took a U-turn. It started pulling down. Okay, most of the market, the ASI all share index started to go down, bearish turn. So most of the stocks were going down. NACO, CWG. NACO went from 105, 108. It went down to as low as 85. CWG went from 16, even 18. Yeah, it reached even 18 before started, going down. It went down to even, I think, 15 or 14. So when the guy saw his, he was in loss, everything red, red. Sometimes that patience that I am saying, we are different. Someone can say, okay, let me still hold on. But the issue is, at the same time, at the end of November, when the market was going down, many stocks were going down. Some stocks were going up. They were either static or rising. So it's very hard to convince someone to be patient at that material point in time, sincerely speaking. No matter how you preach, how sound you preach to that person to be patient that they will rise up, it will be very difficult. Then I said, okay, now what we'll do is this. We are going to wait gradually until they turn green. We sell them and then diversify. Rather than 3 stocks, we expand our horizon. So we waited until around, December, they begin to pick up around 15th December till 8th January. Yeah, 15th till 8th January. Those stocks were sold and then reinvested into, the portfolio was, diversified. Instead of 3, now I created like 35 different stocks. I finished creating that portfolio 8th January, and today is 7th. That's exactly 1 month, even, less 1 day, okay? And just before coming live, I checked that portfolio. It has made 27%. 27% in 1 month. Guess what? Again, the annual rent he used to collect, from the property, within this 1 month, he made about 7 times, 700% the annual rent he used to collect from the property. 7 times in just 1 month. This is not a scam. This is not a Ponzi scheme. This is real stock investment with proper diversification. And if you do it well, you can be part of these gains, sincerely speaking. This is just 1 month. And the total stock, gains is 27%, making almost 7 times. 7 times. Now, let's move to stock recommendation and prediction.
Sorry to cut you off, Doctor. I know it's very much interesting, really. I don't know how many slides we've got left. We've got usually sessions run about 2 hours, and I know there's going to be quite a lot of questions coming up later as well. So,
okay.
If I mean, it's in as much as it's very interesting. I mean, this is the hard part of my job, cutting cutting speakers off. So I do apologize for that. I don't know if we've got about 10 minutes. Is it possible to run over in about 10 minutes?
Yes. I will try as much as possible to compress what I have remaining. Yeah. Now stock recommendation and prediction. Brokers weekly they issue stock recommendation. Stock recommendation here they will like from this a compendium of brokers stock recommendation. Different brokers you can see AfriInvest, Mary Stem, Cardinal Stone, Appel, and all that. The same stock, will have different recommendations because like I told you, being from the engineering background, having understood modeling, I thought, modeling the market will also be easy, but sincerely speaking, is the toughest thing one can ever do. The same stock, as you can see, can have opposite recommendation. Opposite recommendation. One broker will say sell, one will say hold, and the other will say buy. So which one are you going to pick? Okay, which one are you going to pick? So that makes stock recommendation, very difficult. They don't just do it, randomly. It wasn't a random decision. They study. I mean, look at this from Mary's team. They look at it, they look at the fundamentals and provide the upside potential. Like custodian, they expect the price will rise by 42%, but when? Nobody knows. FCMB 40%, Transco for 88%. But Transco, I mean, for the past 4 or 5 months have been fluctuating, moving from 40 to around highest 49%. So this, modeling the market is very, very difficult, I must confess. And this will now take us into fundamental analysis. Like I said, for the investor, you look at what to buy. Fundamental analysis, like what is the profit per earning, PE ratio, the debt to equity ratio. So this will help you to determine what to buy, that is to get in. And then what about when to buy? That is the technical analysis, which will now look at the uptrend, downtrend, moving average, RSI, which is the relative strength index, whether it is oversold, whether it is bullish or bearish. So all these are things that, will also guide someone about timing when to buy, and the fundamental analysis about knowing what to buy. And then you can find a lot of data on all this using investing.com. You can just type the stock and you will see a lot of information about the fundamental analysis, about the technical analysis and all that. So this site helps because before I use I use Cowrywise, because you need to open investment brokerage account to access the data there. But investing.com, you just sign in with your account and then you simply access such data. What successful investors do, okay? What habits? Habits that build wealth. They manage risk. I explain risk. They study businesses. They diversify. They also are patient. They keep learning. You have to keep reading, news, business news, and knowing and strategizing, and knowing when to take position. You look at the Nigerian market. Last year, it has done wonderfully well. 51%. The total market capitalization stands at 108 trillion naira, and it is aiming to reach 1,000 trillion economy. Yeah, that is the target. It is aiming to reach, I think, by 2030, or something like that. It is aiming to reach 1 trillion naira economy. So probably this year we expect Dangote to list his petroleum refinery. That may bring about 1 trillion naira capital, most likely, as well as his fertilizer firm, his fertilizer factory, and then probably NNPC. So these are expected listings that are expected this year. So the stock market transfers money from the impatient to the patient. I think I have explained this very well. One has to be patient once you are in the stock market. When you are impatient, then you have to be careful not to be checking your stock, your portfolio every day. Why do you need a structured learning? From the foregoing, you will understand that knowledge reduces costly mistakes. Most losses, they come from ignorance, rushing, copying others, and lack of proper diversification. And then structured learning, it will help you to know when to sell and understand why you buy. Okay? You understand why you buy, and it will help you control your emotions and understand your risk appetite. And at the end, what is it going to do? It will build confidence. Okay, and this platform, this webinar is geared towards that, towards empowering beginners especially, okay, with the knowledge and understanding of the market dynamics. And the Nigeria versus other international markets in 2025, Nigeria came second in Africa, with Ghana coming first. Okay, Nigeria did 51%, 51.19% on the average. It has about 144 companies. This is the average. The highest, was NCR, which did 1,300%, 345%. Okay, so this is an average value. Some did a lot higher than 51%, while few did lower than that. Okay, but this is the average value. What about the US market? It did 17%, and the Tadawul, which is the Saudi market, last year it was bearish. It did about 13%, so it was negative. Even though this year the year-to-date return is positive, and also it has opened its doors to investors, international investors, non-residents, from 1st February, so they can also participate and trade on Saudi stocks. So yeah. So why am I concentrating on stocks? Very important, because stock is not the only asset class that we have. Okay, we have different asset classes. We have ETFs, exchange traded funds, which can be passive or active. You have mutual funds, under which you can have different equity funds, and then you can have fixed income funds. Okay, fixed income assets. Here you have the bonds, the commercial papers, the treasury bills, the sukuk, and all that. So why am I concentrating on stocks? I'm concentrating on stocks because stock is the riskiest among all of the asset classes. It is the riskiest and is the one that needs the deepest research and understanding. Okay, I mean, fixed income market is fixed income. You just buy, and then let's say you buy FGM bond or sukuk. I mean, you get paid quarterly. You just buy now, you fill the form, whatever it is, you fill and pay, and that's it. It's fixed income. It is the lowest risk, lowest risk. I mean, you get your returns, but the returns is low, maybe 12 to 20%. Of course, the lower the risk, the lower the return. The higher the risk, the higher the return. So stocks, it is the riskiest, but give the highest return. Okay, the mutual fund, if you buy any or ETF, you just buy, and like ETF is like a basket of stocks. Okay, it's like a basket of stocks with portfolio managers. It can be active or passive. Portfolio managers can be trading, to maximize profit, or they can be monitoring a particular index, like the NGX Lotus Islamic Index, in which you have 12 stocks. It can be monitoring like Premium Index, which has, I think, 7 or 8 stocks. It can be monitoring NGX 30, which has like the most capitalized stocks on the market. So like that. So, and you can have mutual funds, which mutual funds sometimes is a combination of fixed income and equities. Okay, but usually sometimes fixed income, depending on the type of mutual fund. Some they buy T-bills, commercial papers, and then few stocks. So depending on the conservativeness of the return or aggressiveness on the return, that will determine the percentage of stocks involved in such equity funds. Now, invitation. What is your next step? From the foregoing, if you want to stop guessing, chasing tips, start investing with confidence. I'm the type that share my experience, in writing. Like I told you, since the beginning of January, I write, and then a few months back, I have been writing on my experience, and then with managing some portfolio, I realized that I need to sell this, wealth creation machine to the world. And how will I do that? Writing alone will achieve a lot, but then I need to take people from the basis, from the very basis, the basic fundamentals and principles. And like about more than 10 days back, I created this masterclass, which is free for 30 days, land stock investment basics. I created 2 groups, one on WhatsApp and one on Telegram. The WhatsApp group has 1,000. The Telegram group has 3,000 members. So every day at 9 p.m., we have a lecture. I will go, I make my presentation by posting gradually, and then we'll have a structured quiz, class work, Q&A, and then I will give them homework. And then every day we meet at 9, and then for about 1 to 2 hours, and then disperse. So If you want to learn more, you can join. Today will be day 11. Okay. But of course, we have done day 1 to day 10, which you might have missed, but you can catch up because on Telegram, you can see previous posts. Okay. You can access all previous posts. And why am I running this masterclass? To enlighten the youth, especially northerners. You see, the capital market, if you look at it, is controlled. The southerners are very clever. They understood it and they, accept it. But the northerners, usually, if you look at the myth, they look at it as completely not their calling, this and that. So definitely our youth, most of them are not into it. And to make millionaires and future billionaires, okay? Definitely, if you're a millionaire today and you continue investing, learning, you will become billionaire in few years to come, I tell you, and clear misconceptions. So these are some of the, after every class, I will create a poster based on the presentation, like a simple presentation poster to summarize everything that we did in the class, so that each one, this is for day 1, but NGX, CHN, SEC, registrars, this is day 3, which talks about who buys, who sells. This is day 4, investor versus trader. This is day 5. Why are you investing? Risk tolerance, matching goals to strategy. And this is day 6, talking about the myth, which I highlighted. This is a recap of week 1. And this is day 8. What do you need to start investing? All the different requirements. And this is day 9, which is going deeper down and telling you about the brokers versus fintech apps and the differences, and comparing and contrasting. And this is the what I think this is the day 10. Yeah, this is day 10, which gives exactly the different steps to open a brokerage account. And that is where we stopped. Day 11 will talk about learning about the interface, learning about limit order, buy order, the order book and all that. And that is what we are going to continue this night. Final reflection, one question before you leave. 5 years from now, will you still only be spending money on companies, or will you also be learning from them? Earning from them. Okay. And then these are some learning resources, some good books, investment books for you to learn the, fundamental principles. These are carefully chosen. And these are some social media pages that can also enlighten you. Like the first one, Well Coach. I mean, he gives live sessions Mondays, Wednesdays, and Fridays. You can ask questions about stock recommendation, analysis, and all that. So, and he has other social media pages on Instagram, on Facebook. And then you have this one, Favor Inya, is the economist, with excellent posts, giving you the fundamentals of the market dynamics. Aikin Ferry, also another social, his Facebook page, Abiodun Olushola, Financial Jennifer on YouTube. And these are some new news pages that you can keep yourself updated about the daily happenings in the market. Nairametrics, it has pages on Instagram, on also WhatsApp. It has a WhatsApp channel, ProShare. Then the Nigerian Exchange Group, it has an Instagram page as well as a web page, NGX Group, I think .com, Money Africa. And the conclusion is, I hope with these few words of mine, if I may say a few words, you have now moved from confusion to clarity, and you will determine to rather than being a spender all the time, you will want to be an owner. Okay, you'll move from spending to ownership. Thank you for listening.
Thank you. Thank you very much, Doctor, for that very, very interesting and insightful talk. I can assure you that it's been a while since I've been, really caught up on really listening to a particular presentation because of, that art of storytelling that you've incorporated into this wonderful talk, and also how you've made this concept that could be quite technical very, very clear. It took me quite a while to really understand liquidity, the concept of liquidity, but this has been very, very much clearer for me today. And I'm sure it's the same for quite a lot of our listeners today. So thank you very much, really. We really appreciate it. You did mention it took you quite some time to research and put this slides together. We really appreciate that. Thank you very much. It's a lot of the time I do spend some time, reflecting, kind of, summarizing what speakers have talked about. In this case, it's been very, very clear. I'm sure a lot of our listeners will agree with me on that. And so without taking any further time, we'll just dive into the Q&A session. I can see there's quite a lot of questions that have been put on the chat box. And I can see there are some of our listeners wanting to ask questions as well. So probably you can read out a few of these from the from the chat box. I can see there's one that talks about the possibility of transferring stocks from one broker to another. But I've also seen a couple of questions about the right platform to use. I know you did talk about day 11 in your program that you're going to be covering that part. But in essence, I mean, for me, a lot of the challenge that I have is, should I really trust this kind of exchanger platforms? And, if I'm going to go in for the long time, 5, 10 years, whatever, I mean, how certain am I that these won't go bust? So how do I identify exchanges to use or brokers to use? And then is it possible to exchange or to transfer stocks from one broker to another? I know there's quite a
can
couple
I
of,
start with
yes,
that question so that we
yes,
take the
please.
questions one after the other?
Yes, please. Thank you.
All right, thank you so much. As you mentioned, you asked about brokers. Can you trust them? The first thing you should do is to ensure that they are SEC approved. Okay, they are SEC approved. I shared on my group, the top 10 brokers and all that. So once they are SEC approved, then you have no issue. Because the issue we should understand is that when you put your money, when they open a brokerage account and now you invest, they don't hold your money. They don't hold the shares. Those who hold the shares is the NGX. They create the brokerage account in collaboration with NGX. It's the NGX that create your CSCS number and the CHN number through the broker. And your shares are tightly held. The CSCS is like your vault. So even if a broker will go under, recently, I mean, there is the recapitalization of the brokers. They have to raise their capital to so amount by next year. So even if a broker will go under, your shares remain safe with NGX. You have no issue. So long as they are SEC approved, you have no issue. You can register with them, buy shares on their platform. And then which broker do you choose? That depends on your choice. I created like a table that I shared with my members, that I analyzed some of the brokers and the fintechs that I use with their relatives. Like for instance, you have the third party apps that are not brokers, yet you can trade on their platforms, but they collaborate with brokers like Cowrywise, like Bamboo, like Trob, like Yocha. All these are not brokers, but you can open a brokerage account and own shares on their platform. But Meristem is collaborating with Cowrywise is through Meristem, Yocha is through Cardinal Stone, like that. So they are all safe, but for those third-party apps, you need certain minimum per stock, about 5,000 naira per stock. But for the traditional brokers like AfriInvest, like APT, like United Capital, like Meristem, there is no minimum. You can buy a stock for as low as hundreds of naira. No minimum. You can buy one share, one single share, no minimum. So there are pros and cons for each one. So I've created like a table and then throw to my members, read, so that you have an informed, choice or informed decision. But so long as they are SEC approved, you can pick any one of them.
Okay.
And then
Thank you very much.
About changing your shares from one broker to another. I mean, you can just decide to change, and then you will do that. You will get a transfer form, you fill and submit, to the new broker. You may get some signature, and then you will submit to CSCS, and then all your shares will be moved. CSCS number is like a bank account number, okay, which is specific
peculiar to every broker. If you open a broker's account here, you have a different CSCS number. If you open another broker's account, you have different CSCS number. But CHN number is like your BVN. It remains same across all brokers. Even though some may have different CHN numbers, but they can consolidate them into one because CHN is supposed to be one and only number, just like your BVN.
I see. Thank you. Thank you very much. There are a couple of questions about where to gain more knowledge. You have shared that towards the end of your slides. There's a question about the slides. Hopefully, we will be able to get the slides. I don't know if it's something that you want to share.
Definitely. It will be my pleasure to share it. Immediately after
Thank you
the
very
class, I will send you the PowerPoint presentation.
Thank you very much. You did talk about halal options. There's a question that says, how does one verify if a company is halal compliant?
Okay, for the halal options, like I mentioned in my slide, like there is a particular index that monitors the halal compliant stocks. It is called NGX Lotus Islamic Index. And in that index, you have 12 stocks. I mentioned them. I mentioned all the stocks, 12 of them. MTN is there, Boa Food, Dangote Cement, Presco, Okomu Oil, NACO, all these. It means they pass through, the requirement of a Sharia board compliant. They are Sharia compliant. But so these are the NGX Lotus Halal Index. But there is another ETF that even monitor the halal. That is Lotus Hal 15 also, which is one of the booming, stocks because ETFs they are usually traded just like stocks. I mean, I bought my Lotus Hal 15 at around 75. Now I think it has gone to about 160 or so. It has done over 100%. So this is like an ETF. So this is one. This is regarding stocks, and there are many equity funds, halal equity funds. On Kauriwise, a lot of them, halal equity funds. Because on Kauriwise, you can even turn your account to be halal by default. You sign in after you register, you can just check that you can check in that your account to be halal so that it gives you only halal options. And then it has so many halal mutual funds, equity funds, so many of them. So many of them.
Thank you very much for that. I know you did talked about, I mean, a number of times you did talk about due diligence. People conducting research before they, kind of dive into buying some of these stocks. And I know you did share some of these websites, for example, investing.com. But do you want to just, elaborate a little bit in terms of due diligence? Exactly what should people be doing? What should they be researching on before kind of investing heavily in some of these stocks?
Like due diligence, like I mentioned, is about fundamental analysis. Fundamental analysis is simply like at the beginning when you want to buy a stock, you have to ensure that that company is doing well because this is not like crypto. I mean, crypto is not tied to any business, So it's something like mathematically, this you buy. So, but these are tied to real companies. You buy sugar, you buy cement, you buy, fuel and all that. So they are tied to real company growth. So you have to make your own research. I gave example about TIP. TIP is a waste, management company. I mean, for decontamination, and then it wants to improve, it wants to expand, it wants to bring more machinery. So this is like helping your country because I see like this investment, especially for those of us that are living abroad, as the best investment strategy because most of us, for one reason or another, have been, duped, have been scammed, have been cheated out of because you are abroad, you want to start a business, back in Nigeria, and then you have to trust some guys that in one way or another will cheat you. But this one, you have absolute control over your money at any point in time. You can see how it moves, how it falls, and you can take it out at any point in time that you wish.
Thank you. Thank you very much for that. I think we'll call on some of our participants today to ask questions, make comment. If you can unmute yourself, put on your camera, please, and go straight to the point. Thank you very much. I'll start on Aliyu Haruna. Do you want to unmute yourself, put your camera on, and ask your question or make your comment, Aliyu?
Yeah. Thank you very much. I'm not sure if you can see me.
We can hear you.
Thank you very much, Doctor, for the wonderful presentation. I'm a medical doctor here in Nigeria, and I'm interested in stock market. I'm just want to see if I want to join your group, and maybe from that 30 days discussion, it can be extended, and maybe real time discussion and guidance on what to invest and invest in real time for continuous guidance up to when you decide to let us go. I will really appreciate that.
All right. Thank you for your question. Definitely, you can join the group. I shared the link is t.me/learn stocks, learn stock investment basics. Because Telegram channel, you can even search it online. You can even go to Telegram and search learn stock investment basics, and you'll see the group, and you can join. Of course, the intention is to have it 30 days, and after the 30 days, it will be like an avenue for me, I mean, to be interacting with the members as well. But given my tight schedule, I must confess that, having a full-time job, here as a professor, so my lectures, other things, it has been a very hectic because I take the lecture at night, 11 p.m. here in Saudi Arabia. You can imagine when I'm supposed to be fast asleep. And then usually I take another 2 hours, presenting, answering questions. So I will keep the momentum for these 30 days. And thereafter, it will still remain open, for sharing ideas. And for stock recommendation, like I mentioned, Coach Omete is very good, resourceful, channel there. I mean, it is live. You can call and ask, and then we will continue. I mean, the channel is not going to be closed down after the 30-day masterclass.
Thank you. Thank you very much for that. Muhammad Bashir Ibrahim, can you unmute yourself, turn your camera on and ask your question or make a comment, please?
I will share the link to join under the chat section.
Thank you, Doctor.
Assalamu alaikum warahmatullahi wabarakatuh.
Alaikum salam.
So thank you, Doctor, for a wonderful presentation you have made. So we are so happy. We are so happy for that. I'm Muhammad Bashir Ibrahim Bane from Zaria local government.
Thank you, Muhammad. Do you have a question or comment?
Yeah. So I have a question, and I have to thank Dr. Salihu Lukman for a wonderful, beneficial things he used to bring to us. We really appreciate for that. So I have been one of the people that follow Salihu Lukman in his various social media handles. So I really benefit from the things he brought to us. We are so happy for that. So what I wanted to ask for is that, please, Dr. Salihu Lukman, we are so happy to see you that you bring this beneficial to into.
All right, the pleasure is mine, sincerely speaking. I mean, all the time, like I mentioned, it will be my greatest pleasure to see our youth, to see our people understand this, stock investment very well and key into it. That will be my greatest pleasure.
Thank you. Idris Bello, can you unmute yourself and ask your question or make a comment, please?
Okay, thank you very much, Mala Tariq, for the hosting of this event and then bringing it to our youth in the north to be well informed about the stock market. Actually, I'm a student of Doctor in the 30 days masterclass. His follower in various social media handle. I've been following him, and I've wanted to even meet with him in person. Last time I was in Saudi, but our distance was far, so.
We would love to do that as well. Right.
You're welcome.
Do you have a question? Okay.
And I'm just uploading the presentation in meeting room.
Thank you for that. Ahmad's iPhone. Do you have a comment or a question?
Yeah, thank you very much. Apologies, I'm not in a good position to open my camera. Thank you very much for the wonderful presentation. Just a couple of questions. One, what can you say about foreign shares versus local shares? Uh, like investing in a foreign stock market compared to investing in the local stock market. Recently, the social media has been awash with the news that Saudi is going to open its market, for non-Saudi indigents. Do you have any advice, around investing in Saudi? They were talking about Aramco, some of the Saudi banks, and quite a lot of investment opportunities there. I think it was supposed to open by the 1st of February. So what advice do you have, for people who are interested in investing in Saudi? Recently, the dollar has been falling. Naira is really getting strong against the dollar. What is your perspective, around the stock market, future in the wake of dollar, are falling? Is it going to be positive, for the investors, or it is going to be negative for the investors? I quite understand that it is really tricky to balance between, the high liquidity stock and also the low liquidity stock, for the fact that the return, are quite different. But what I can understand from your lectures is to have a kind of flavor of, the three, buckets you mentioned. Now, from your experience, how were you able to strike balance to ensure that, once investment continue to keep afloat in the wake of this confusion? Thank you.
Oh, this your question is another lecture entirely. All right, let me take them one after the other. First of all, you mentioned about the international markets, vis-a-vis the Nigerian market and the exchange rate, the Naira getting stronger and the promising the potential of the Nigerian market. If you remember during my presentation, I made mention about 2008, crisis where people lost money, some companies went under and all of that. Sincerely speaking, if you look at the trajectory of the all share index, it has been improving. And since 2013, 2023, 2024, it is bullish, improving, and it is not just by chance, actually. It is not just by chance. There are a lot of fiscal policies on ground that have strengthened the stock market, the capital market, that is and that has led to the stock market becoming stronger, and then people are getting more from the stock market than before. I mean, part of them is, this bank recapitalization is one of them. The brokers recapitalization, the insurance recapitalization. And then you have, the Dangote refinery, which has, in a way, reduced the pressure on FX, on the dollar need to import. So all these have, and then the removal of fuel subsidy, and then the fact that the Naira dollar exchange rate has remained relatively, constant within certain range for the whole of last year. GT Bank, I know for the past, some years, you can use your GT Bank abroad and make expenses, but because of the volatility of the exchange rate, they stopped, all banks. But now GT Bank has resumed. You can use up to, I think, $1,000 per month. And that is because it goes to tell you that the fiscal market, the confidence in the capital market is back. And then now, even before, long time, since last year, one famous economist, Bismarck Rewani, who's the CEO of financial derivatives, he has mentioned that, the Naira is undervalued. And if it is undervalued, then it means gradually it will get up to that its actual value, and that is exactly what is happening. And as the value is as the Naira is getting more value, the inflation is going down. I tell you, the stock market will be booming. And for all those in the stock market from January to date, just this 1 month, they will tell you how the stock market has been booming. And with respect to international markets, of course, you have the Saudi market, like I mentioned, the US market as well. The US market did 17% overall, but then you also have some stocks that did hundreds percent. Okay. So just like you would study the Nigerian market, you have to take your time and also study the US market. Otherwise, if you just go for the big names, and all that, sincerely, you may be even in red. And for the Saudi market in particular, I'm also in the Saudi market. Last year, it hasn't done well. You see, it's minus 12.8%. But it is hoped that opening its doors to international non-resident, and all that, that will see the influx of many investors into the market. And, as you have many investors, then definitely it is expected that it will hold good potential. Okay. So I think I have answered your questions. Yeah,
Thank you. Thank you very much for those wonderful responses. We'll ask a few more and then we'll call it a day. Remember, the discussion ain't finishing here. We have the Telegram pages that we can continue these discussions. I'll ask on Nazir Ibrahim, if you can unmute yourself and ask your questions. In the meantime, Dr. Majik, I'll call on you later on for your closing remark, but just a few more questions. Nazir Ibrahim, can you unmute yourself?
Assalamu alaikum.
Alaikum salam.
So Tariq, nice to meet you today, and thank you for the wonderful presentation. Even though the presenter is my lecturer at Ahmad Bello University, Daria, Water Resources Engineering Department. Thank you very much, sir.
You're welcome.
My question is that, please.
Are you there, Naziru?
1, 2 to 3.
Nice.
I didn't hear his question.
Lost him. Yes, we've lost him there. I didn't hear that as well. We've lost him there, unfortunately.
And I already uploaded the presentation slides. I already uploaded, so you can download it from the meeting room.
Yes.
Hello, sir. Can you hear me, sir?
Yes, I can hear you.
Yes, it has been listed, Zikis, and it's doing wonderful. It's booming. It was listed at a rate of 1.89, but as I'm telling you today, it is around 5.6 naira. I tried to buy several times, but I cannot access. I use Bamboo. I use AfriInvest. Please, how could you address this? Thank you very much, sir.
All right. That's exactly, it means you have to be in our class tonight, because that's exactly what we are going to discuss. Limit order, how to place your order. Some stocks, especially the rising ones, moving very fast, depending on you realize they have low liquidity. You place an order, you cannot get them, and then the following day they increase by 10%, and then you cannot get them. So now, when you want to get such fast moving stocks, one, you may have to watch the market for the entire day. That is 10 to 2:20, 10 p.m. Sorry, it opens 10 a.m. and closes by 2:20 p.m. So make sure exactly at 10 when the market opens, you try to place your order using the limit order. Of course, when you open, then if you see any offer, because it's like something that you have been chasing and you couldn't get, if you see any offer, irrespective of the price, you modify your bid to match that offer. When you do that, you get it instantly. And from time to time, some offers will, beep, will come out, and then people will quickly get them, and then they will disappear and they will be taken. So when you monitor the market, from time to time, you will see it. You will see some offers coming in and out. And when you see that, you just put the price, you rebid again to match with that offer price, and you get it instantly. That is one. Two, when it is like at the highest level, 10% of that day, you can place your bid and leave it like that. If there are offers that come, you can still get them even if they don't show up. So you can be monitoring and seeing, and then you can still get it in 1 day or two if you do it this way. But sometimes, such stocks, there are the traders, the institutional traders, when they see, such fast moving stocks, they try to enter at the bus station and get as many as possible. And gradually, as it is moving, they'll be releasing, small shares daily and will be benefiting. So that is why the liquidity, so it becomes somehow manipulated in a way, and they will be gaining. So that is why it's very good to enter, at the bus station when the bus is leaving the station.
Yeah. Thank you very much. And just two final questions. One talks about Sukuk investment. What are your thoughts on Sukuk? I know this might be a little bit out of scope. If you want, you don't have to respond to this. And then there's a lot of discussion now about taxes. I mean, there's a question that talks about tax implications. I think we'll call it a day after these two questions. Thank you.
All right. For Sukuk, I mentioned Sukuk, is a fixed income class, somehow resembling bond, but different from bond in the sense that because it follows the Islamic principle, so you are like lending money to the government and it's paying you rent. So if you look at like the payment, it's a fixed income asset. So you pay, let's say, maybe it lasts for 1 year and you will receive, the rent, let's say every 3 months quarterly, some twice a year, every 6 months, like that. And that's it. So you just go and buy it, and like some of them, they are all available. If you go, like recently the FGM, because they have some timelines of opening such bonds on all Sukuk. Recently, though, it's not Sukuk, this is FGM bond that is currently on sale as well. And then you can buy them through the brokers. And then when you buy, but like I said, this one, you buy and then you just hold, it will give you a return, let's say 15%, 18%, and that will now be spread if it is 1 year tenor, 2 years, 3 years, depending on the duration. And then at the end, you get your full investment money back. And then
Thank you.
what was the other part
about the tax?
Oh, the tax. Yeah, the tax, sent investors into G3 when it was announced. It was part of what was responsible for the bearish performance of the market in November. As far as investors are concerned, there is already what is called withholding tax, which is 10%. If you sell your stock, and you make profit, so 10% will be taken out. If dividend is paid to you, let's say 10,000, let's say you have MTN dividend, which is, let's say, 100,000 naira, that based on the dividend yield. So there will be 10% withholding tax, meaning 10%, which will be 10,000. So you, instead of receiving 100,000, you will receive 90,000. So which is the same thing that has been operational. The only thing that affects investors is when you now, let's say, from the proceeds, from the gains you did, if you decide to withdraw without reinvesting, if it reaches, let's say, 150 million, that is when you will be charged a tax. So, and that will be over a 1 year span. 1 year span. Of course, this is for big time investors. I mean, 150 million is no small money. I mean, this is for big time. And this is if they don't reinvest the proceeds to buy others, if they don't reinvest it for a whole duration of 1 year, then that is when they will be taxed upon the proceeds.
Mm.
Thank you very much. And this brings us towards the end of the session. Just a vote of thanks from our host, Dr. Maji. And I can see some of our members, organizing committee might have a word or two to add as well. And then we'll call it a day. Thank you, Dr. Maji, over to you.
All right. Thank you so much, Dr. Tariq. And as we reach the end of the program, I would like to express our sincere appreciation to everyone who made it to this session. And our sincere thanks to Dr. Salihu Lukman for his time and for simplifying this talk. It is really very insightful. And I was always saying, wow, while he is in the middle of the topic. That's really great. And we hope, actually, due to the importance of the topic and the high level of interest people showing, and we may kindly invite our speaker to come back maybe in future. We may have some other session in the same area. Thank you so much, Doctor, for the time. And I would also ask our mentors to thank them for the mentors for being here, and all our organizing committee members, Dr. Tariq, Dr. Akubu, and all those who are around. And also to thank the participants who are here present, and also to add to you that we already explained at the beginning that everything will be uploaded on our social media, particularly in the YouTube and Telegram. We will have the slides, and also the talk will be on YouTube. So thank you for your time, and have a nice day. Back to you, Dr.
Thank you very much. Thank you, Doctor. I can see we have Dr. Mariam and Dr. Akubu. Do you have anything to add? We had a lot of burning questions, some of which, most of which have been answered today, but I don't know if you have any questions that haven't been asked that you want to ask, or any comments that you want to make.
No comment, Doctor. It's fine. It's clear.
Alhamdulillah. And then finally, I can see there's someone advertising for some people to buy stocks. Remember, as we've said when we started, the presentation is merely for more or less really what's the word? For educational purposes, right? So we're not advising you to buy anything at the moment. So thank you very much once again, Doctor, for sparing your time to be with us today. We really appreciate it. And thank you for the participants. And we'll call it a day. Thank you.
You can also be part of it as a mentor or student. Join the Arewa Youth Mentorship Program on Telegram, Facebook, Twitter, and Instagram. AYMP, together we can be great.